Hi guys. Hi. How's it going? So I am still stuck here in Winnipeg. That's right. Because I messed up on my passport application and I had to resubmit it because of just some very minor things. So I was supposed to pick it up today, this afternoon, and then I was supposed to be on a flight in about 1 hour, but it's not happening. And I took a massive hit on my flight cancellation because I bought one that didn't have any insurance on it. So here I am having to rebook it. So I'm officially leaving Sunday now that my application is most likely going to be approved for pickup on Friday afternoon. So on that, guys, I'm here for 3 or 4 more nights. So I am not going to see a single soul here in the city. I am going to be focusing on trading extremely heavily. So here we go, guys. Let's do this. I'm not going to get into too much details with my personal stuff, but I do plan to go to land in Marseille, France, and then I plan to go to, where am I going? To Aix-en-Provence. Then I'm going to go to like Avignon, Arles, kind of that area over there. I'm going to go to Nimes. I want to go to Pont du Gard and Orange. I want to go to Les Beaux Remy. Let's kind of do a little route there for about a month. So I thought I was going to stay in Marseille, but not going to happen, guys. I'm not too keen on staying there. I was going to stay in like the 5th arrondissement, whatever or however you pronounce it. But I think I'm more of a fan of like Avignon and Aix-en-Provence. It's where I've been before, so I'll most likely stay there for at least a week and then just do a few days in each one. Then most likely go to Italy and Germany. So for now, guys, I'm just going to focus heavily on trading. I'm extremely disappointed that I cannot leave. I've got everything here like kind of packed already. So yeah, anyways, let's get into this, guys. But don't think I'm going to disappear, guys. I just kind of need a change of scenery. And I need a change of, I guess, like lifestyle as well. My friends here, they're honestly like crazy in terms of my city is a party city, put it that way, right? Where everyone's just drinking really heavily. So I need to kind of get away from the city, get away from a lot of fake friends who have really changed in the past year or 2 years since I've been doing a lot better with cryptocurrency, I guess. So because of that, I kind of want to make new friends and just learn a lot more about myself. So it's kind of like a self-discovery journey that I'm going to be going on, all right? So let's get into this technical analysis, guys. Thank you very much for your support and for your love. If you guys love my videos, make sure you guys give me a thumbs up and make sure to also subscribe to me on YouTube and on Twitter. And I started Instagram as well, where I'm going to be very happy to show you guys a lot of the photos of the travels when I'll be going through them. And the goal is to ultimately inspire a healthy lifestyle change, like how I will be doing it for myself as well. So guys, let's get into this technical analysis. Bitcoin it was ridiculous how this drop ended up playing out, right? But I want to show you guys how this was able to be predicted, okay? Whenever you see something hover like that on the MACD, it's very implicative to me that it's going to eventually drop because it can't sustain this type of, we'll call it altitude, for a long time, right? Not only that, if you're starting to see histogram ticks down like that, where it just simply cannot break into higher highs, just start to assume, guys, that it's going to break down. Not only that, if we compare these right here, okay, this region to those regions right there, what we easily see that for highs, right, we're getting a series of higher highs for price action, but what we're getting is actually lower highs in strength, right? Take a look at here. So whenever you see this type of formation where we're getting simply lower highs on the RSI, but higher highs on the price action, and then you also see it with the lower highs on the actual histogram, and this here as well for the MACD where it's just hovering upwards, it's very easy, in my opinion, to assume that it was going to break down. That's how I was able to have that very, very profitable month so far, right? Now, we're going to take a look at it on the overall big picture, okay? What I recommend is going to logarithmic scale if you guys are looking at this over the long haul. So the first thing that I would recommend doing is that, right? What you want to do is simply that right there, okay? So what I'm doing right here is just to show you guys that we could have even done it like that, right? Where we could have considered some of these a bull trapped region. Now, it's very arbitrary how you decide to draw this. You could draw it from wick to wick, right? Like that. You can draw even through some of it right here. Let's say we go to a daily chart, right? And then you consider some of these regions bull trapped regions. Now, what a bull trapped region is it's when the bears are basically trying to trap the bulls, right? So they're gonna drive up the price, so the bulls are buying, thinking it's going to go up. So there's a false creation, a false sense of it going to go up, but instead of the bulls end up getting trapped and the market ends up dropping. So these regions are regions where bulls are literally trapped, right? So you just see these tiny little regions right here that's poking upwards. Here we kind of just grazed it. Now my point is, this is a very significant resistance right here that's been established since pretty much the uptrend on February 6th, right? So in order for us to break into much higher highs, in my opinion, on the bullish side, we need to break, guys, above 71. Like now that we didn't break above, like 75, 74, 73 regions, we have to break this resistance. And this resistance right here can be very arbitrary. Now, on the bullish side, if we break out of it, I'm going to show you guys what some of our targets could be. On the bearish side as well, we have to acknowledge the fact that this region right here, do you guys see this? These regions right here, there, right? Close to there, there. Those are all regions where the bulls or the bears are just trying to drive it below that region. So we are finding support, guys. We're finding heavy support anywhere between 5,800 like we reached last time here, all the way to like 6,200 ranges. Now, supports and resistances are not usually defined at one specific number. In my opinion, it'd be very prudent to assume that a support is at one number, right? I always consider it in a range. Now, I'm going to show you guys something pretty funny to notice, okay? Let's clear all of this up as well. Now take a look at this right here, okay? I'm just gonna get my, where the heck do you get this here now? I don't know where you get this in now, where you're getting your drawing tools, your favorite drawing tools. Where did they change that to, guys? Could not even tell you. Yeah, I couldn't even tell you where it is anymore. I guess I have to do it all manually. All right, so take a look at this, guys. Since the February 6th downtrend, where we went up like that, and then we came down. What do you guys notice about this right here, okay? What you notice is that, let's go 0 to 1 so you guys can see this. According to Fibonacci retracement right here, from where the uptrend ended to where the downtrend ended, according to Fibonacci retracement, we actually reached this golden zone right here. It's called a golden pocket. And what a golden pocket is a region where it's between 0.618 and 0.65 Fibonacci region. It's like a pocket that will catch it, right? So on an uptrend or a downtrend. So notice that happened the first time there, okay? That's the first time there, which I'll actually keep on here just for you guys to see. And then the second one is right here that it happened. Check that out. Coincidence, guys? Pretty crazy, right? And guess what? If we actually draw the trend line like that, what we notice is that it happens to hit right at the trend line as well, right, on the resistance. So you're finding a lot of confluent reasons that it's going to act as a resistance. Now, if I do for the third one, well, it was supposed to be right around here, but we simply never reached it. And we ended up downtrending heavily instead, right? Okay, so now let's talk about the bear side, okay? Let's talk about Elliot wave first of all, and just talk about some of the significances of an impulse wave failure, okay? So an impulse wave failure is when this specific wave, say wave 2, ends up falling more than 100% of wave 1. So this one could fall 99.99% repeating, but it can never ever fall 100%. If it does, that's considered impulse wave failure. Now, other basic criteria is that if you guys are falling below here for wave 4, right, it can fall into wave 1 territory by simply just a wick or maybe 2 wicks. right, on a lower time frame or high time frame, depending on where you're evaluating it from. But it could not fall below this right here, right? This should act as a very heavy resistance, or sorry, support on the downtrend. So wave 4 likes to fall into this territory right there. But if it falls, you know, for example, here, that's considered an impulse wave failure as well, okay? Now let's say there are 5 impulse waves up and this does a simple ABC. The moment that this ABC falls below the territory of where wave 1 began right there, then that's also considered an impulse wave failure. Are you guys following so far? If you guys are not familiar with these concepts, I highly recommend you to, first of all, take my course, guys, if you haven't already. It doesn't cost a lot of money at all. Not only that, it's going to prepare you for course number 2 that I've been working very diligently on for you guys. So if you want to understand the Elliot wave, you got to make sure that you guys, oh crap, I'll be right back. I forgot my Clamato in the fridge. Okay, I'm back, guys. By the way, guys, I'm no longer drinking alcohol ever. I'm gonna like have a little sobriety challenge. Literally no more alcohol, guys. I realized that I've been drinking a little bit too much whenever I go out. So I just want to have like a 1-year sobriety challenge. I don't think I'm an alcoholic or anything at all. It's not like that. But I just really want to have a very healthy lifestyle. So I'm going to be drinking a lot of Clamato. This is just literally just Clamato juice. And yeah, that's kind of what I like to drink now. Just want to go to the gym. I promote a very healthy lifestyle. So if you guys are not following me on Instagram, check out the link below, guys. I'm going to be, I'm going to start an Instagram where I want to inspire a healthy lifestyle and especially inspire a healthy change in careers as well, because, well, cryptocurrency has absolutely changed my life, guys. So I also want to have the same impact on you guys as well. So cheers to some good V8/Clamato. That's incredibly good. Tastes like a Caesar, but it's not a Caesar, right? Okay, so guys, if we break below here, it's going to be a violent drop. I mean, the next support range is going to be so low. I'm just going to go to a regular scale now. Like, next support range, honestly, in my opinion, will be between 4,800 and 5,500 if we end up breaking below here, right? Okay, but now let's talk about, I want to lock this scale. How do I lock it now? This is a completely new trading view, I realize. I'm not entirely used to it quite yet. All right, so now what we're going to do is, well, first of all, let's wrap this up, okay? Notice how it never hit 0.618 fib region or that golden pocket, but all these previous twos actually did, right? So now the next logical step for us to deduce is we would want to take the Fibonacci range right here, okay? What we see is that this is at the 768 region right here, or sorry, the 786 region, right? And guys, what is the flavor of the month? The flavor of the month is pretty much 786 right now, okay? Very, 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 very popular Fibonacci level for it to be landing on. And we are actually finding decent support right now on it, right? So let's just say that this was basically 1, 2, 3, 4, 5. That has officially finished already. And we could actually break this down into 5, guys. Absolutely, we 100% could, okay? It would be like this. Let me show you it. So this would be 1, 2, 3, 4, and that's 5, right? Absolutely, it can be done like that. Now let's go to trend-based fib extension, okay? Where this one, actually no, that one would not work like that at all. So this would have to be moved to something like that, okay? Where this goes 1, 2. Let's actually try to break this down even further. Okay, I'm gonna go somewhere down here. Because the reason why we couldn't do it like that, okay, is because wave 3 is often the longest and never the shortest. So technically we could do this, okay? We technically could make this 1, 2, 3, 4, and 5. Because what we see is that wave 3 is longer than wave 5, despite wave 1 being actually the shortest. So this can work out as well. Not only that, this would fit the criteria as basically a leading first wave diagonal, okay? Let's say this right here would be a leading first wave diagonal where it goes something like that, right? So let me explain to you guys the concept of a leading first wave diagonal. Very important for you guys to understand, okay? A leading first wave diagonal is also known as a rising bearish wedge, okay? where the first wave is actually often the longest, okay? Often the longest. And then, upon reaching the fifth wave right there, there's sometimes something called a throw over. It doesn't happen all the time, but it happens often because the bears want to basically trap the bulls. And then it leads into a sharp decline like that, where it throws it over just very much so slightly above the actual resistance, okay? So once again, wave 1 is often the longest, and wave 3 is actually shorter than wave 1, but it's longer than wave 5, which absolutely meets that criteria, right? So this would end up going like 1, 2, 3, 4, which is basically just a wick into the wave 1 territory, and then it breaks down. And then now we're landing to somewhere like right there, okay? So to me, this honestly looks like an ABC that is actually forming. And the ABC sucks, trust me, okay? It really sucks the way it's looking right now. But sometimes it makes kind of like a fifth wave in here like that, where C just ends up is found often in like a ending fifth wave diagonal, right? Something like that, where the wave, let me just do this again for you guys, okay? I'm not gonna break it down too far, right? Something like that, where it ends up making like an ending fifth wave diagonal here, or even like a flat. So that can be found very much so often in the C wave. But right now, the important thing to make note of is that we're gaining strength, guys, okay? We're gaining strength on the 8-hour chart. In fact, we've ticked up already, okay? We've ticked up already to the histogram side positively. Take a look at that, right? We're crossing over. So we've crossed over almost on a 10-hour as well. But have we crossed over on a 12-hour? No, not yet. But what you do see is, let's say we go to a 6-hour chart, okay? See how it's gaining strength on a 6-hour chart? So I'm almost tempted to go long on it right now, honestly, okay? So let's just say that this was actually a bullish run, where this meets the criteria already of 5 waves going up, and ABC is pretty much formed already. Now, if we look at our target, okay, it's actually a really decent target. We would end up targeting anywhere in between the 0.6, or sorry, the 1-to-1 extension or the 1-6-1-8 extension, okay? So according to Fibonacci extension, okay, what we would like to have if this was a bullish run is something like this, okay? However it is, however long this B is. Who knows? This might only be the first wave, right? We don't know, but just a longer term projection, right? We might even get a truncated ABC where this ends up doing something like that, and then we're going to shoot up, and then we get a truncated ABC where the C simply does not fall below the territory of wave A because it's very bullish, okay? Now, we don't know how this is going to play out, but what we are able to confirm is if this does end up breaking, first of all, we take the Fibonacci region here, okay, and we say to ourselves, okay, well, is this actually going to break above? So this is kind of a key region for me to see how the price action is. So am I interested in going long right now? Yeah, I actually am interested in going long right now. I don't know with certainty yet, and I have to take a look at the level 2 and the price action to see how it's holding. But I might add even 10% to my long position, to be quite honest right now, guys, just to see how it plays out. And then I want to see if it breaks above this region to confirm if this is actually an ABC or a possible uptrend going upwards, right? So what we would like to see is it going to break? We want to test each of these fib regions, and then we should be adding more to our positions as it breaks these key regions, while also confirming it confluently with RSI to see if it has momentum and strength as well. Make sense? Okay, so what we would love for it to do, let's just say it was, right? We're gonna say this right here. Whoops. We're gonna say, all right, well, this is how conservatively I play it. I say, all right, wave 3 is often the longest and actually never the shortest, okay? So I'm just gonna assume right here that we're gonna make a wave impulse wave up if it breaks well above there, okay? We're gonna go for a 1-6-1-8. That'd be just beautiful. So if a bullish run does start, we're just gonna fly through that zone. And then we're gonna try to bounce off of here. And then wave 5 will be to be determined, right? It all depends on what wave 3 does as well. So guys, there is a chance for us to actually have a good bull run this year still, believe it or not. So does this make sense where we do something like that? Where we could end up just going 1, 2, 3, and bam, a big like that, and then we just bounce upwards, right? The reason why this is possible is because we have to treat wave 1 as a hard support always, okay? Not only do we have to treat it as a hard support, but we also have to treat this massive trend line right here that's been established since the uptrend on February 6th. So there's a lot of things for me to consider. Now, I hold not a significant amount, but I hold a good amount of Bitcoin, about 100 right now, and that's all that I'm going to be holding. But guys, if we do enter a bullish market this year, it's really up in the air, right? It really is. I'm just trying to find, as an Elliotician, or Elliot wave trader rather, if we actually have a recipe for success for the bulls to be entering the market. And the answer is yes. It's absolutely possible right now. So the question is, are we bullish? And how do we confirm if we are bullish, okay? We confirm we're bullish by literally just testing each of these regions as we go up, right? So we're going to be looking at the 0.5, the 382, the 618. Can we break the 382? Can we break the 0.5? Can we break the 6.5? Can we break the 786? Can we break a 1-to-1 extension as well? So what I call these are confluent reasons to be entering the market for a long-term position, right? But I do want to warn you guys right now that we are on a downtrend, okay? We are on a downtrend according to many criterias for moving averages, right? Finally, only bullish on a 20-minute chart. Barely, not even bullish on a 30-minute chart, right? So according to all of these charts right now, we are absolutely still very bearish because we're not moving over to anywhere significant on a golden crossover on a higher time frame, right? So if I look on a 2-day as well right now, we're diminishing in volume right now, but this acts as like a tweezer pair combo sort of, right? So whenever we get these combinations of candles where we're getting just simply rejections to 6100, between 61 6200, that's a lot of rejection, guys. Now let's go to a 1-week chart to see how that's looking. So a 1-week chart last week was incredibly bearish, huge bearishly engulfing candle, right? But what we do have to acknowledge is that, hey, on the weekly, we're gaining a little bit of strength. That's kind of cool right now, okay? So is this going to cross over to the upside? Because it looks like every single week, guys, we're getting higher ticks on the histogram. So let's go to 1 month as well. On the monthly, guys, we're only, 12 days in, but we're looking incredibly bearish. What we're noticing on the monthly is that it's bouncing off of the 21 moving average. And historically, we haven't really fallen below the 21 moving average since last time we were below it was like October 2015. So if we break above here, honestly, the 20 to 21 moving average, it's going to be a very scary drop. So yes, the first few days or first week of September was fairly bearish, but I do believe there is a chance for us to still go up fairly high, because we're getting a lot of signs right now where the bulls do look like they want to try. So look at on the daily chart, okay, guys? We got this bullishly, this is called an inverted hammer, okay? An inverted hammer is a long wick to the upside right there, right? And think of it like a hammer candle, but upside down. And then we got this guy right here, which is like a bullish spinning top, followed by a doji candle and another doji candle for today. That's got about 3 hours left to close. So these combinations as well, as soon as we start trading higher than this range at 63, as soon as we break, guys, this range right here that I'm going to highlight, it's go time to be adding slightly. You also want to ladder and increase very small your position size in very small increments, right? You micro buy. So other than that, guys, I think yeah, you guys have my 2 cents right now. Like I can't help but feel that we are gaining strength. Looking on the histogram as well, we're not going nearly as low on the histogram side as well. So that's always a really good sign. Like compared to August, guys, it's looking very decent to have the formula for an uptrend. But it's going to take a lot of time and patience, guys, right? Remember right here how many days it took before? Like here, it took literally 2 weeks for us to finally make a move, and it was a really long lull. So the longer we hold at a specific place, and if there's strength that's being shown in the market, like I'm talking about right here, that took 2 weeks, right? There is a good chance for us to still break into some higher highs this year. So once again, we're just waiting to see how the 12 hour is going to look as well, right? Are we going to actually gain strength right here? Yes, we are. We're definitely gaining strength, right? We have more strength on the R side than we've ever had before. So other than that, guys, thank you very much for watching my videos. Thank you everybody for all the love and the support. Please make sure you guys give me a thumbs up if you do enjoy these videos. I do plan to do a lot more technical analysis because once again, I'm freaking stuck here until Sunday. And unfortunately, it was my fault, but I think I have even more things to wrap up still. So this is really good for me to be doing this. So other than that, make sure you guys are also following me on Instagram. I would love that. Once again, my goal is to promote a very healthy lifestyle in general, whether it's inside of us here, like in our hearts and who we are. I want to be able to help you guys discover who you are. I want you guys to live the best lives we can possibly live in our short lives. So thank you very much for all the love and the support, guys. Take care, and I'll see you guys later for my next TA video. Bye now.